Here with Rufai. We are in Washington. It's day one of the IMF World Bank spring meetings. And we're just talking about, I think, sort of the main meat of these meetings.
Yeah.
IMF boss Kristalina Georgieva has been talking a lot about not focusing on that single interconnected global market,
Yeah.
but focusing on the economic fragmentation that we're seeing ourselves in now. And she's advising countries that, look, you need to prioritize your regional trade alliances even more. And for countries like Nigeria, I think that also talks about focusing and strengthening our ties within Africa when it comes to the Africa Continental Free Trade Agreement. Rufai.
I mean, it's quite very apt, because at a time like this, that we live in a country with all of the back and forth that has happened to the world market as regards to tariff, which is also a conversation. The proliferation of AI, which was, the conversation on the first panel, by IMF and ISCO. You definitely know that this is a time to look inwards, and there's no other place to start from than the African continent. So all the talk we have been talking about AFCTA all this while. This is the time to be able to implement it. Because if you don't get it for African trade, is it global trade you're going to get right? And if you don't increase the capacity of inter-African trade, is it global trade you want to get right? And when you look at the numbers are really very, stacked against us. Look at the Trump tariffs recently. Lesotho got about over 40%. How do you want to thrive? The best bet is look inward across the African continent, bolster, increase on those numbers, and then see how growth can come. And the fears are there because, I mean, hearing people have conversations, the fears are there as regards the role of America. There's a new world trade order. And that's why it's quite a very somber meetings we're having this year, unlike the very bullish meetings we used to have. A lot of the growth prospects have been scaled down.
Yes, and we're expecting that World Economic Outlook on Tuesday, April 22nd. And even when you talk about looking inwards, other regions are doing that. When you look at the US CHIPS Act, I think that's a great example. They're funneling millions of dollars into a domestic semiconductor production, reducing that reliance on Asia. When you take a look at Europe, they're also focusing on that strategy approach, especially with what happened with the supply chain chaos during the pandemic. And even in China, they are also looking at focusing on that belt and roads, also trying to create their own trade corridors. But let's talk about Nigeria. We know that IMF recently spoke about the reforms that are going on in Nigeria and how, yes, they are necessary. However, it's not trickling down to the people. It's not trickling down to states. It's not trickling down to local governments. I just wanted us to talk a little bit more about that.
And it's very apt, and that's why we should be careful about the pills we take, especially from the IMF. We know what happened to this country, Nigeria, in the 80s when we went through all that, brouhaha about SAP. But I'll tell you a very interesting story. I was watching an interview with Yanis Varoufakis. Yanis Varoufakis is the former Greek finance minister. He was the one that negotiated a pathway for Greece when Greece went into a big debt. He wrote a very instructive book that says, "And the weak must suffer what they must." And the book was pretty much talking about the fact that if you have not built your economy, you will suffer. And guess what? He said, he told a very particular anecdote. He said, when they were negotiating for Greece, he told Christina Lagarde, then she was still at the IMF, and he told her that, see, this is going to have a very sad effect on our people. And Christine Lagarde called him to a corner and said, yes, I know, but this is what the IMF says. So even they themselves, they know the harmful effects. I mean, look at what is happening to Nigeria. Unabated inflation. We rebased the inflation rate to about 23%. It has gone up to 24 again.
Yes.
So they know that this pill does not better the lot of people, but to be able to fulfill what they intend to do, they allow us swallow that pill and it starts to hurt us. And that's what is happening. So We should also be careful because they will keep praising you and tapping you at the back because you're doing what they want. But they know. Just imagine what Christine Lagarde told Janusz Varoufakis, that we know it's not going to better the lives of the people. We know. But you say it's the things we are going to swallow? Yes, okay, we have seen the reforms. And how many people can buy the petrol in Nigeria? How many people can feed now in Nigeria? Most of the companies are leaving. Okay, we took the peel of the currency, we removed currency subsidies. How many people can have the access to the dollar now? So that's why we need to be careful what we listen to about the IMF. We need to look for a way to grow within.
Yes, and I think I agree with what you said. So the IMF says, look, you're doing well, but you're not doing that well because your people are not feeling the impact of these reforms. And reforms are basically very important when the actual citizens are feeling it.
Yeah.
When you look at the macroeconomic scoreboard and you say, yes, we're doing well, John in Ikotekpene is not feeling it.
Yeah.
Maria in Ibadan is not feeling it. And so that macroeconomic great scoreboard doesn't mean anything to the Nigerian citizens. But let's talk about jobs.
Yeah.
The World Bank president, Ajay Banga, says he's focusing on jobs. He says, look, the math is ridiculous at this point. Over 1 billion youths will emerge in the next decade. However, we only have 250,000 jobs available in the next decade. And so he's focusing this meeting. He says, look, whatever reforms we're doing, whatever policies we're doing to attract private capital, if we don't have jobs, it's just going to end up being an ambition.
I mean, very apt. See, that's why when President Trump was talking about, we need the factory job, manufacturing jobs, what he fails to realize is that automation has taken most of those jobs. AI, the session from ISCO and IMF was talking about AI is taking most of these jobs. So definitely we are going to have a huge job shortfall. And what does that lead to? Restiveness. Look at what's happening in Nigeria. Look at the insecurity that is going on. But this AI is also supposed to create an opportunity for innovation. But the question is, where are the leaders there to champion the innovation in Africa, for instance? Where are the leaders in Nigeria that will champion this innovation? Where are they? Who are those that will invest in the youth for the next frontier? And you see, out of that 1 billion ready market available for youth that Ajay Banga is talking about, I can tell you a sizable percentage of that is from Africa.
Yes.
Sub-Saharan Africa. But our leaders will not be able to, hedge and create solutions to the problem. And that's where we are stuck as we speak.
And I think more of the solution to that problem will be Nigeria investing in or focusing on the investable sectors, because investors look for two things: predictability in the climate that they are going to invest in, and profitability. So they need clear rules, they need clear policies, they need stable currency, and they also need functioning courts. But just to wrap this up, what we're expecting from IMF World Bank spring meetings, World Economic Outlook, we're also having the G24 press conference where you have our own Minister of Finance, Wale Edu, as the first Vice Chair, Rufai. What do you think? We already know that the numbers are being pared down when it comes to the World Economic Outlook. What else are you expecting?
Because of the trade tariffs and the issues, that went on last week, a lot of the numbers are pared down, but also the optics of the markets. There's a lot of lack of trust between the global north and the global south. I mean, when you look back, you can't imagine how Lesotho was given a tariff of over 30%. They said there's a trading balance. America exports a lot of commodities to Lesotho, but the only thing that comes from Lesotho to America is pretty much the germs, minerals, gold, diamonds and the likes. But the people in Lesotho are so poor that they cannot afford American goods. Then they tax them for trading. But is it their fault that they are poor?
Well,
is it their fault that they are poor, that they cannot afford American goods, and you tax them for trading balance? So these are the problems that we're speaking about.
And these are one of them.
And that's why the outlook is very bleak. I think it was at World Economic Forum in Davos at the start of the year. that in a panel session, Ngozi Okonjo-Iweala was talking about the fact that this is going to cause a multiply disastrous effect on the world economy.
It is, but I think also the way that the IMF boss is looking at it, Christiana Georgieva, is saying, look, we understand this new world order and we understand the disruptions. However, we need to embrace it. We need to look at our neighbors. We need to look at people who are closer to us and work on those ties. If we cannot have that global interconnected market anymore, we need to look at alternatives.
So
And
we're going to, as we wrap up, we're going to see some traction. Let's have a final decision on who becomes. Hopefully, Mark Carney should be elected Prime Minister in Canada, because there are some speculations that he played a very big role as regards influencing the bond market that made Trump recede most of what he did. Let's see how that pans out. Let's see what Canada's response is. They hold a couple of American bonds. Let's see what China's response is. China too holds a couple of American bonds. Let's see how we can simmer this down and allow cool heads prevail.
all right, as markets open on Tuesday, April 22nd, and the IMF World Bank spring meetings continue, we'll have world economic financial leaders here talking tough on the new world order that we are seeing. Thank you.